I've always joked if I ever write my own autobiography, it's going to be titled "A Lifetime of Seriously Worse Haircuts."
I like that.
Or no, a lifetime of consecutively worse haircuts. That's what I'm going to call it. Hey everybody, it's your boy Chicago Sean McLaughlin. I'm with my man Steve Strazza. Steve, how you doing?
Good, man. How's it going?
Doing well, man. We're back on the Flow Show. We missed it last week. I was out gallivanting in the redwoods of Northern California. I hope you didn't miss me.
No, we always miss you when you're gone, but we like you to take these little Zen vacations of yours.
It was very, very Zen indeed. Well, hey, let's get into the markets here real quick because in the 2 weeks since you and I have done this, I've got my my VIX chart up here, and in the last 2 weeks, we have really seen VIX just really plummet. Now, we're still, historically speaking, at elevated levels. 19 VIX is not cheap or low by any means, but from where we've come from over the last 3 weeks, that is quite a, let's call it mean reversion in the VIX. And no surprise, we've seen the indexes, broadly speaking, you see the indexes rallying pretty hard over the last 3 weeks, yeah?
Yeah, and the VIX is just put options, right? So you've seen it in the put-call ratio. It's really come in as, investors are positioning less and less defensively. There's been a lot of risk-on developments in recent weeks, so this price action in the VIX makes sense,
Yeah, I mean, it makes sense, but if you're somebody who just reads the headlines and watches news all day long, it kind of doesn't jive with the world that the media is trying to scare us into thinking is happening. I mean, there's still a lot of headline risk out there, but the stock market disagrees, or at least disagrees as far as nobody's really positioning in a scared type way right now. At least it doesn't feel like it.
No, it doesn't jive with the headlines at all, but it jives with some of the, risk data and risk indicators that we look at, whether it's the breakout in Aussie yen or credit spreads, not just not blowing out, but they've contracted back to very depressed levels again. Interest rates continue to work higher, not just in the US, but around the globe. You're seeing volatility come off. If you're just reading, the cover story in the news every day, though, you would look at this and say, really?
Exactly. So this is the Flow Show. So this is where you get to reveal to me the latest Follow the Flow chart that show us all the unusual options flow that's happening out there. So this is the first time I'm seeing it. Of all the names here on this list, I'm looking at it right now. You got about 20 names on this list, which is pretty normal. Yeah. What is sticking out to you right now? What's really caught your attention?
Well, not one-offs aside, if we're talking about themes here, I'm going to just continue to reiterate the same thing. We keep seeing these commodity stocks hit the list. A lot of energy names this week. Again, that's nothing that's out of the ordinary. We've been seeing this for months now, but the first name, FTI, that's an equipment and services name, oil and gas space. If you move down a little bit, you can see Southwestern Energy Company, SWN, some bullish call activity there. Again, you're seeing it with chemicals. That's Gevo. We got a gold miner in there. I know Sibanye Stillwater, that SBSW.
Yep.
We like that name. We were talking about it, the analyst and I this morning. If you zoom out on that chart, boy, is it beautiful. But it's a trade just to get back to the breakout level now. You could see those former highs with that chart, Sean, on the left side of the screen. But just to get back there, and there's more former resistance at that level when you zoom out even further. But just to get back there, you're looking at like a 20% move. So it's not ready for us chart setup wise. But then you keep going. You get Tellurian, that's another oil and gas name. TELL. Cameco really stood out. I want to talk about that one. That's a uranium name. And then outside of that, you're starting to see the growth names kind of sprinkle in. We had a little crypto miner this week. Hut 8 Mining, that's Hut. Snowflake, everybody's probably familiar with Snowflake, popular software stock IPO'd recently. Fubo TV, these are ARC stocks. Palantir, these are ARC components. SoFi, SOFI. So you're starting to see investors warm back up to the most beat up stocks. I think that bodes pretty well. I like to see that kind of action. What do you think?
Yeah, it feels like people are feeling a little bit more comfortable with taking risk. None of these seem exceptionally risky bets, but the fact that there's a lot of those names that you mentioned, it does feel like people are, not as scared as maybe we saw a few weeks ago. And people are saying, "Oh, okay, it's time to put some risk out there. Put some risk capital to work and take some shots here." And that's a good thing. I think that's overall bullish for the entire market, in my opinion.
Yeah, and so we missed last week.
We did
put out a trade on CCJ Cameco. It came up on our scan, with bullish options flow twice last week, back-to-back days. It looks like Thursday and Friday. You can see it hit the list. Thursday, there was action in April's, looks like weeklies, but still. And then on Friday, there was action in June calls. So the June 30s and 35s.
Yeah, we put the trade on.
Yeah.
We put the trade on Wednesday. So I'm glad to hear there's been additional unusual options activity. And, we talk about this every week when we do this show, is that just because there's an unusual options trade, it doesn't necessarily mean that we want to go in and do the exact same trade, nor does it mean that we want to take any kind of trade. When these trades happen, when these unusual options trades happen, it just brings that stock to our attention, and then we dig into the technicals to see, hey, do we like the technical picture? Because if we like the technical picture, that supersedes anything. And knowing that there's unusual options activity in the direction of the trend that we've identified, that just gives us more confidence. So I love hearing that there's more bullish options flow here, because we're long. We got long last week.
Options traders were reading your note. So
maybe we'll see. But you personally haven't got into this trade yet, but you've been talking about getting in. You're going to buy this dip today?
Yeah, I didn't get in last week. I'm looking at it today. I know I just mentioned it to you. I'm thinking about it. Sell me on it. Why should I buy it? You still like it?
Well, look, you could get in. I believe you can get in at a better price than I get. I might be up a little bit right now.
It's sold in today, but it was up end of last week, right?
It was up. Yeah, it was up last week. So we bought the September 30-40 bull call spread. I believe is what we bought there. So let's see what it's priced at right now. Let's pull this up. Looking at my screen. Yeah, 235. I paid 220 for that. So you're paying a little bit more than me, but hey, you got a little bit more confirmation. So it feels like a better trade for you.
And I got the options flow now at my back. So.
That's what I'm saying. You just got more reasons to love this trade. And well, look, we've got time. We've got till September. In fact, when we put the trade on last week, JC and I did a video on Thursday, kind of a day late on it, and I felt kind of bad that we were a little bit late because it had already run up a little bit since we gotten on. I was saying to everybody, hey, just be patient. We got time. And sure enough, it did come back a little bit. So, hey, I still love the trade. I think this is a great entry right here.
I mean, look. It should have legs. Our price target isn't something we're looking to get hit in a few weeks or even a few months. We're looking at like 60-70% upside, I think. Yeah, 44. We just took out like that shelf of former highs around 26. So I think you have like 2012 and 2014 high. I'm showing it. I have that chart up here. That's a really nice base. We see these bases all the time. This is, a major trend reversal, bull bear reverse, bearish to bullish trend reversal. Not just in the absolute trend, but we love getting confirmation when we also see that kind of pattern play out in the relative trend, which is in the lower pane. So you can see that kind of smaller base forming and starting to move higher. That's CCJ relative to the broader market. That tells us that this stock is going to be a leader. It's going to be an outperformer. You're probably going to have fund managers chase it and want to get into it. It makes sense. It's in the right space. So what was it? A nice base in the right space was your title today.
Hey,
this one too.
That was all you.
So we like buying charts that look like this. We also have the options flow at our back. Makes a lot of sense.
Now I'm noticing on your chart there, you say that you highlight the June 17th, 30 and 35 calls on the offer. I just want to, kind of highlight what that means for people who might be wondering, what does that mean? So we're seeing these large options trades happen on the offer price. So, right. So an option has a bid and an ask, and differently than stocks, most stocks these days, at least most liquid stocks, have a pretty tight bid-ask spread, right? We're looking, a penny wide, 2 pennies wide, maybe 5 pennies wide at the most for most liquid stocks. Options, different story. Options can have a much larger bid-ask spread. Doesn't mean they're illiquid. It's just kind of, we'll call it a feature of the options market. But when you see an option that's quoted at $1 on the bid and $1.25 on the offer, that's not uncommon. But $1.25 offer is 25% higher in price than the dollar bid. So when you see somebody paying the offer price, just paying the offer, they're being aggressive, right? They want in. They don't care about the price. They're just, I want in. Because if somebody was a little bit more discerning, like I typically am when I get into a trade, I'll look at the bid-ask spread and I'll try to work my order somewhere in the middle, right? So if I'm trying to buy calls in a stock that's bid $1, offered $1.25, I might put a bid in at 105 just to see if I get hit. I probably won't, but I'll put it there anyway. And if I'll let it sit for a minute or two, if it doesn't get filled, I'll uptick my bid to 110 and then on to 115. And usually between 110 and 115, I'll get filled. And that's a fair price. And that's kind of what the market is pricing in. But when you see somebody hitting that offer, that's an aggressive buyer. That's somebody who doesn't care. They just want in. So that's why we highlight that there. That's notable information.
And I will typically do the same thing. But again, to your point, when you see that these transactions are executed on the offer, that's just telling you of the two counterparties, the buyer was the aggressor. That was the more aggressive counterparty that really forced the trade. If I'm trying to get into an options trade that I think is moving on me, and I probably won't do it if the bid-ask spread is 25 cents, like in your example. But if it's, reasonably spread and I want to get in, I'll pay the offer all day because I want to get in, and that's kind of the urgency that you're seeing, which is why we scan for them in this way. It wouldn't make sense to look at stuff on the bid or even at a mid price, I think. And then the same would apply for things in the opposite direction, right? So puts on the bid, similarly bullish. Similar to kind of calls on the offer or what we're
bearish, similarly bearish if you're hitting the bid. Oh no, I'm sorry. You're right. Selling a put. Yeah. That would be bullish. You got me all confused there. And I should be the one who knows all this stuff. All right. So CCJ, you're buying the pullback. It sounds like.
Yeah. I'm getting in.
Welcome to the party, Strazza. We're happy to have you. I'm glad we covered that thing about the buying on the offer versus the bid, because I think that's very important and it's not something that's stressed enough. Any other names from that list that we need to talk about real quick before we move on? Yeah,
let's. So today you put out a trade on Kinder Morgan, which is like the industry leader in the natural gas space. We didn't see bullish call activity in KMI, Kinder Morgan, last week, but one of its kind of peers in that space. This is another natural gas kind of stock, Southwestern Energy, SWN, and there was some bullish flow in this name. Similar to Kinder Morgan, nice base, maybe a longer term base than Kinder Morgan, but same idea. A lot of these commodity charts look the same. They keep resolving similarly and having these bullish, legs higher. So if it's worked with the last ones, these kind of look the same. We're kind of just, the playbook now is just kind of keep running the same play, right? Keep running these same base breakouts back in these commodity stocks.
Right. Although I have to tell you, when I'm looking at this SWN chart, this is something that I spoke about in that post I put up this morning about how there's a lot of names that we like in this space. The problem is many of them have had such aggressive runs in the last few weeks that it makes it hard for me to chase them. And like me personally, I'm looking at this daily chart of SWN. I don't know if I'd want to buy it here right now. I'd maybe want to see a little pullback into the low 6 area to get in. And a lot of, unfortunately, there's a lot of charts that are like this right now. So it's making it hard to find those sweet entry points right now. It doesn't mean they're not out there. It just means you got to look harder.
Yeah, I don't disagree with you. I mean, something like this, if you want to hold it to $10, which is where our target is, the risk reward is still there. But really, ideally, you kind of want to buy weakness in this back towards that base breakout level in the mid to upper $6 range.
Yeah, like if I could buy that around 650, maybe 625, that would make me very, very happy.
100%. Yeah, you got those former highs there too. Makes sense. So maybe one to keep on your radar. Problem is right now you either have the best stocks that are extended to the upside, like you just talked about, or with the worst stocks, it's something that we were talking about this morning. I feel like all these trades are very cute to get long some of these beat up stocks. They do have nice bases. And from a tactical basis, they're looking nicer and nicer. But when you zoom out on those charts, unless you have a pretty short time frame, it's kind of hard to get behind any sort of, long.
Right. You and I were talking this morning about this MPC, Marathon Petroleum. We want to be buying it if it breaks above 88.
Yep.
If I zoom out here, I'm looking at a daily chart, but if I zoom out on a weekly chart, like
see those 2018 highs, right?
Yeah, I mean, this is one we're keeping an eye on. If we can get above 88, the trend is definitely our friend here. Yep. Obviously the oil space all around is a good place to be, or has been a good place to be so far for this year. No reason to think this can't continue.
And I believe this is the refiner MPC, and then they also have MRO, is the other marathon, which is I think that's the E&P name, right?
Yeah.
They're both similar looking charts. Both look really nice. Yeah, I agree with you.
All right. Well, Strazza, I hope you go big into CCJ to help my position along.
I'll show up on the option scan tomorrow when I'm done getting into my trade.
Ladies and gentlemen, of course we're kidding. We're not that. We aren't big. We aren't a big hedge fund over here. Buying thousands of contracts when we get in. We're not moving markets in that way.
Definitely a joke.
All right. Well, thanks, man. This was a great flow show. I think we covered some educational topics today, which is good. Awesome. We'll be back with you next week. Until then, trade them well, everybody. Thanks for tuning in.
Later, guys.